US officials are privately signaling that the long-promised semiconductor tariffs may not be imposed as soon as expected, raising questions over a key pillar of President Donald Trump's economic agenda, especially to do with tariffs. Now, semiconductor tariffs, seen once as central to Trump's push to reshape global chip supply chains, could now face delays as the administration weighs down on this move.
U.S. officials are privately saying that they might not levy long-promised semiconductor tariffs anytime soon. That could signal delay for a centerpiece of President Donald Trump's economic agenda. Sources tell Reuters the administration is treading carefully to avoid reigniting a trade war with China, even after Trump promised 100% tariffs on chips back in August. Officials say triple-digit tariffs could still come at any time, but for now, Washington is weighing timing and scope. The White House insists there's been no policy change. Any delay would come as Trump faces voter frustration over high prices, with tariffs on chips potentially pushing up costs for electronics. Meanwhile, the Commerce Department has cleared exports of advanced AI chips to two state-backed Gulf tech firms. The approvals, tied to strict security conditions, cover sales to Saudi Arabia's Humane and the UAE's G42. They will each be allowed to buy the equivalent of 35,000 of NVIDIA's cutting-edge Blackwell chips for massive data center projects. The announcement coincided with a visit to the U.S. by Saudi Arabian Crown Prince Mohammed bin Salman and represents a big show of support by the U.S. in the two countries' AI aspirations.
Just days after the U.S. government shutdown officially ended, some key economic data has begun to see light of the day, and mixed signals really emerging from the U.S. jobs report. Now, the U.S. jobless rate has crept up in the month of September, although hiring exceeded analyst expectations, according to a delayed employment report published on Thursday. After this, what I mentioned, record-long government shutdown. Mixed cues coming and some sentiments now moving towards the fact that the U.S. Fed may not go ahead and cut those long-pending interest rates. Take a look.
A much-delayed U.S. jobs report showed hiring in September beat expectations, but the unemployment rate ticked up. The report showed U.S. non-farm payrolls grew by 119,000 for that month, higher than the average forecast of 50,000 jobs, according to economists polled by Reuters. The unemployment rate increased 0.1 of a percentage point to 4.4%. Thursday's report had been due on October 3rd, but was delayed by the record 43-day government shutdown. That shutdown forced the government's Bureau of Labor Statistics to cancel the release of an October jobs report, as no data was collected for that agency's household survey. Heading into the economic data blackout, the BLS had estimated that about 911,000 fewer jobs were created in the 12 months through March than previously reported. The delayed and canceled releases of closely watched measures of U.S. economic strength come amid rising tests of the job market. The growth of artificial intelligence is eroding demand for labor. Most of that pain is landing on entry-level positions, locking recent college graduates out of work. Despite the overall job growth, some sectors are shedding jobs, including transportation and warehousing, and some economists say the murky picture and lack of data could influence the Federal Reserve's December policy meeting. Fed officials will not have November's jobs report in hand after its release date was pushed back to the middle of the following month.
Bitcoin plunged below the $90,000 mark this week, while Malaysia's state utility exposed illegal power siphoning by crypto miners. Now, here's a roundup of this week's biggest stories in the world of cryptocurrencies.
From Bitcoin's value woes to illegal power usage by crypto miners in Malaysia, this is Crypto Weekly. Bitcoin rebounded on Thursday after plunging to a 7-month low below $90,000 the day before. It's the latest sign that investor appetite for risk-taking is drying up across financial markets. The risk-sensitive cryptocurrency has lost all this year's gains and is now around 26% below its October peak. According to tracker CoinGecko, about $1.2 trillion has been wiped off the total market value of all cryptocurrencies in the past 6 weeks. Kraken, one of the world's largest cryptocurrency exchanges, said it has confidentially filed an initial public offering in the US. That's as digital asset companies look to tap the new listings market before the 2026 midterm elections. Companies such as stablecoin issuer Circle and crypto exchanges Gemini and Bullish have made strong debuts in the US this year. US senators pressed Michael Selig over his nomination to lead the Commodity Futures Trading Commission. President Donald Trump's nominee was challenged over his plans to overhaul cryptocurrency regulations and election betting, among other hot-button issues. Selig is currently chief counsel for the Securities and Exchange Commission's Crypto Task Force and an advisor to Trump's Republican SEC chair Paul Atkins. Malaysia's national utility firm Tenaga Nasional BHD has incurred losses of more than $1 billion. It's from illegal power usage by cryptocurrency miners between 2020 and August this year. TNB found over 13,000 premises had illegally used power to mine crypto over the period.